in November, and therefore you have just under 2 months in order to get your personal tax affairs under control. In fact, remember that personal taxes is your single largest expense. So here are a few tips that you should take into consideration for your 2015 personal tax year. If you have minors who have earned income, any amount, consider filing a tax return for them, because this will allow them to accumulate an RRSP room, which can be used later. If you have children who are 19 years or older, even if they have no earned income, you should file a tax return for them, as they will get GST and HST credit payments from the government. But they can only get these if they file a tax return, and this payment is done quarterly, and for this year it's worth $272. Consider making as much of an RRSP contribution that you can afford. This is probably one of the largest and easiest ways to reduce your personal tax bill. However, remember not to over-contribute, as this can be very costly. Take a look at your 2014 Notice of Assessment to see your RRSP contribution rule. Remember that you don't have to deduct all your RRSP contributions in a given year. You can save it for when you expect to have a higher income. If you are in a lower tax bracket, it may make sense to use a TFSA instead of an RRSP to save for retirement. Talk to your financial advisor about this. Now, if your net income is $72,809 and or over, and you have started to receive your old age security pension payments, which is the OAS payments, then it's likely that you have reached the threshold where the government will claw back some of your OAS payments. And if this is your situation, consider splitting your income with your spouse in order to bring your net income below the threshold. Consider also after-school recreational programs which could qualify as childcare. So for example, a karate club that lasts from the end of school to when parents can pick them up, this will qualify. But this is so only if the parent had to do this in order for them to work. As well, some legal fees incurred as part of a separation or divorce are deductible. For example, costs that you have incurred to enforce pre-existing child support rights, whether or not those amounts are taxable, those can be deductible. So talk to your tax advisor regarding this. For the 2015 year, there is no longer a credit that is received for children under 18 years old. This is replaced by the UCCB checks that you have received, and this amount will be added to your income and is taxable. Consider making your charitable donations before December 31st, 2015. Remember to check the CRA Charities website to determine if the entity you are contributing to is an eligible registered charity. If you have adopted a child, you are able to claim a non-refundable tax credit for certain adoption expenses. The maximum claim for 2015 is $15,255. If you're a first-time home buyer, you qualify for the first-time home buyer's $5,000 credit, but you must have taken possession of the home in order to claim this. You can also claim the public transit credit for you and other eligible family members, but you must retain the receipts to support this claim. You should also file tax returns as a family. This way, you don't make mistakes on claiming credits or waste them on family members whose income is low. Another reason to file together is to enable the tuition credits to go through. If your child files their tax return before the parent, the tuition credit cannot be transferred to the parent at that time. Consider too, if you have an eligible dependent who does not live in Canada, but who is your spouse and you support, you can claim that person as an eligible dependent. It is not applicable to any other dependents, even a child, as these other dependents must live with you. If you are a sole proprietor, remember that you will have to pay CPP on your self-employment earnings. This is in addition to your income taxes payable. If you own more than one rental property, you may deduct auto expenses incurred for collecting rent, supervising repairs, and providing general property management. Again, the quickest and best tip that we have is that you should file on time. I hope you found these tax tips useful.